In early November 2022, the cryptocurrency exchange FTX collapsed, causing 15 of the world's largest cryptocurrencies to lose over $152 billion in market value in just 3 days. This collapse shook the entire industry, as experts fear the lasting consequences it could have in broader markets. So, what exactly went wrong? In today's video, we will be looking at what exactly caused the swift fall from the grace of the cryptocurrency giant, FTX, as well as what this could mean for the future of the market. So make sure to stay till the end. Welcome back to the channel. If you're new here, then welcome. Let's not waste any more time and let's get into it. What exactly happened to FTX? It all started on the second day of November, when CoinDesk revealed that the trading firm also run by Bankman-Fried, Alameda Research, held a position that was worth $5 billion in FTX's native token. Alameda's investment foundation was also revealed to be an FTT, the token invented by its sister company, and not another cryptocurrency or a fiat currency. Of course, concerns and doubts about the Bankman-Fried's company's undisclosed solvency and leverage started spreading across the industry. On November 6th, the world's biggest crypto exchange announced its plans of selling its position for around 23 million FTT tokens, which is equivalent to about $529 million. Changpeng Zhao, the CEO of Binance, stated that this decision to liquidate their FTT position was based on risk management. The next day, FTX, unsurprisingly, experienced a liquidity crisis. No matter how much Bankman-Fried tried to assure its investors of the stability of its assets, customers started demanding to withdraw a total of $6 billion in the days after the release of CoinDesk's report. Bankman-Fried had gone to other venture capitalists for additional money before eventually turning to Binance, but it was futile. FTT's value fell by 80% in just a couple of days. November 8th saw Binance announcing its non-binding agreement to purchase the non-US business of FTX for a sum that wasn't disclosed. This is essentially Binance bailing out its close rival in the cryptocurrency exchange market. However, Binance's promise to rescue FTX was short-lived, as a day later, they backed out of the agreement. On November 9th, Binance revealed that corporate due diligence was concerned about how FTX mishandled customer funds and several other issues that led to Binance's decision to cancel their deal. It doesn't stop there. By the time November 10th had arrived, FTX's Bahamian subsidiary, FTX Digital Markets, had their assets frozen by the Bahamas securities regulator after they had received news that Bankman-Fried was looking for up to $8 billion in capital to bail out his company. That same day, the California Department of Financial Protection and Innovation launched an investigation of FTX. On the same day, Bankman-Fried went on Twitter and apologized for the liquidity crisis, as well as admitted FTX's non-US exchange's inability to meet customer demands due to its lack of funds. He said that it was poor internal labeling that caused the miscalculation of their liquidity and leverage. On the 11th day of November, Bankman-Fried stepped down as CEO of FTX and was replaced by John J. Ray III, the same person who led Enron through bankruptcy proceedings years ago. It was also on that day when FTX filed for Chapter 11 bankruptcy protection, revealing that the proceedings also included about 130 affiliated companies. When you look at the bankruptcy filings, it indicated that FTX's total assets were in the $10 billion to $50 billion range, while its liabilities were also in the $10 billion to $50 billion range. Another question was raised in the middle of everything: did FTX actually get hacked? Hours after filing for bankruptcy, FTX revealed that it was the victim of unauthorized transactions. It then told of its plans of moving its digital assets to cold storage to ensure security. About $477 million was said to be stolen in the suspected hack. By November 18th, the Securities Commission of the Bahamas took control of FTX digital assets, revealing that they had instructed Bankman-Fried to move their crypto assets to the regulator's wallets as a way of protecting its creditors. So, what now? What exactly will happen to FTX and the market as a whole? As of mid-November, withdrawals have already been disabled and customers have been strongly advised against depositing. It will take time for the broader consequences of the FTX collapse to unfold. This has been the largest collapse in the short history of cryptocurrencies to date. It may end up further deterring investors who were already wary because of security and stability concerns. There's also a chance that FTX customers will not be able to recover any of their assets, which could lead to them taking legal action. This collapse of FTX could also be used by the U.S. Securities and Exchange Commission, as well as other regulators, as further justification for tightening the scrutiny of cryptocurrencies. Not to mention, it could lead to Congress stepping in and creating new laws that govern digital tokens and exchanges. It may be a long time before the industry recovers from the collapse of the third-largest exchange. The increase in withdrawals in the market and investors' renewed hesitance in joining the market is likely only the beginning. What about you? What are your thoughts on the entire FTX fiasco? If you were an investor, would you still want to invest in the market in the future? Or if you're a customer, what would be your next step? Feel free to discuss your thoughts below, and don't forget to like and subscribe if you enjoyed the video. See you on the next one!